Take a look at gold right now. No, really, look at it. This is not a normal chart. This is not a markets are calmly pricing in future expectations chart. This is a chart that looks like gold drank 3 energy drinks, watched a motivational video at 3:17 a.m., and decided it was time to change its life. For decades, gold has been boring. Respectable, sure, but boring. Over the last 40 years, gold averaged somewhere in the mid-single digits annually. It was the asset equivalent of a dependable Honda Civic. Not exciting, but it got you where you needed to go. Something you owned because you were responsible, not because you wanted thrills. But over the last 5 years, that has completely changed. Gold has been averaging close to 20% per year. That is not boring. That is not normal. That is gold putting up MVP numbers in a league where it was supposed to be retired. And that immediately raises an uncomfortable question. Either we are no longer living in a normal world, or humans have suddenly developed an intense emotional attachment to shiny rocks that economists somehow failed to model. Personally, I think it's a little bit of both. Because here's the weird part. Nobody can agree on why this is happening. Traders don't know. Economists don't know. Analysts don't know. Even the guy on Reddit who thinks society will collapse and everything will be settled with beans and silver coins doesn't he fully know. Everyone has a theory. Nobody has a clean answer. Gold is hitting all-time highs while the stock market is also near all-time highs. That alone should make you uncomfortable. Markets don't usually behave like this. They usually pick a side, confidence or fear, risk or safety, not both at the same time. Which tells us something important. Something big is happening underneath the surface. And whatever it is, it's not being talked about nearly enough. The first explanation everyone jumps to is inflation. And yes, inflation has been brutal. Rent went up, groceries went up, fast food went up so much it feels like McDonald's started consulting with private equity firms. But inflation alone does not explain gold's behavior. If gold were simply reacting to inflation, it would have exploded back in 2021 when consumer prices were rising faster than MEMS after an Elon tweet. But it didn't. In fact, gold barely moved. It just kind of sat there like it was unimpressed. That matters because it tells us gold is not reacting to what already happened. It's reacting to something else, something forward-looking. Gold doesn't care about headlines. It cares about trust. And right now, something is happening to trust. For roughly 80 years, the US dollar has been the backbone of the global financial system. It's the world's reserve currency. Central banks hold it. Global trade relies on it. Commodities are priced in it. Entire economies depend on it functioning smoothly. But recently, something has started to change. Not loudly, not dramatically. No emergency press conferences. No, we're dumping the dollar announcements. Instead, central banks are doing something much sneakier. They are quietly diversifying away from the dollar. Think of it like a breakup that hasn't been announced yet. The couple still post photos together, but the signs are there. Old pictures get deleted. Conversations get shorter. Backup plans start forming. 20 years ago, central banks held over 70% of their foreign exchange reserves in US dollars. Today, that number has dropped to about 58%. That may not sound dramatic, but when you're talking about central banks, that 12-point drop represents trillions of dollars. And where is that money going? Not into euros, not into yen, not into pounds. It's going into gold. Gold is not replacing the dollar. Not yet. But it is becoming the global financial system's emotional support asset. Central banks are buying gold at a pace we have never seen before. For 3 consecutive years, they have purchased over 1,000 tons annually. That's more than double their historical average. In 2024, central banks bought more gold than at any point in recorded history. And surveys show that over 40% of them plan to keep buying over the next decade. 95% expect global gold reserves to increase in the near future. This is not speculation. This is not a fad. This is institutional anxiety. Gold is what you buy when you don't fully trust the system, but don't want to cause a scene. It's the financial equivalent of opening a separate bank account just in case. Let's be clear. The US dollar is not collapsing tomorrow. Anyone screaming that the dollar is about to die is either selling something or already knee-deep. In precious metals, the dollar is still deeply embedded in global finance. There is no realistic alternative ready to replace it overnight. But what is happening is a shift from blind faith to conditional trust. And that distinction matters. Gold doesn't rise when people feel confident. It rises when confidence starts cracking. It rises when institutions hedge outcomes they don't want to admit out loud. What we're seeing now is not panic buying. It's preemptive positioning. Here's where things get truly strange. Stocks are soaring. AI companies are being valued like they've already replaced half the workforce. Real estate remains expensive. Risk assets are acting like the future is bright and predictable. At the same time, gold is acting like something is deeply wrong. Bonds are confused. Stocks are euphoric. Gold is anxious. Historically, this does not happen. Markets usually agree on the general direction of the future. Right now, they're arguing. This creates a dangerous environment where investors think everything is fine, right up until it isn't. Gold isn't rising because it's shiny. It's rising because the biggest players in the world are quietly repositioning. Central banks don't chase trends. They prepare for scenarios. And right now, they are preparing for a future where debt levels are higher, geopolitical risk is rising, and monetary policy has less room to maneuver. Gold is their hedge against uncertainty they don't want to publicly acknowledge. And when institutions move quietly, it's usually worth paying attention. The story here isn't that gold is winning. The story is that trust is weakening. We're entering a world where optimism and fear coexist, where growth narratives and hedging behavior happen simultaneously, where markets send mixed signals because the future itself isn't clear. Gold doesn't predict the future. It reflects how comfortable people feel about it. And right now, comfort is fading. This is why this gold move matters. Not because it's exciting, not because it's profitable, but because of what it represents. Something is shifting beneath the surface of the global financial system, slowly, quietly, strategically. And whether this ends in a soft landing or something more chaotic depends on decisions that are still being made behind closed doors. So let me know what you think. Is this smart hedging or the early signs of something bigger? Drop your take in the comments, because that's where the real conversations happen. If you enjoyed this breakdown, hit the like button, subscribe for more deep dives like this, and I'll see you in the next one.